was disappointing. We had a beat for the quarter, as you mentioned. We've got revenue growth. Despite the change in guidance, the midpoint of the guidance is still above prior years, so we're going to grow. But, we did adjust to reflect the changes, the net change in fuel and currency. I think there was a reaction to that, but I think there's a broader reaction just to consternation, as there has been for some time, because we have consistently beat for the quarter and then had drops on the calls. Sometimes overall market drops, sometimes like today it didn't. And I think part of it is just a fear amongst some people that this is a cyclical industry. They see additional capacity coming on, and they're anticipating that cycle to turn because we have such a good run. But we feel that, in fact, we know and we plan for continued earnings growth, sustained earnings growth in the years to come, double digit, and elevated return on invested capital, which is already double digit.
But have bookings been a bit softer than you'd hoped so far this quarter? Was that another factor you think that the analysts were picking up on?
No, we see no weakness. We have capacity increase. Bookings have been strong. In fact, we have less volume to book now, same time as last year than we did last year, and that's with capacity increase. So we're ahead on bookings. We're doing very well. It's just this consternation around looking for a particular yield number and this fear, I believe, of that the business is cyclical, and not seeing a yield number in the face of the capacity increase reinforces some of the perceptions that some people have. But the reality is we're going to deliver, and we believe when we deliver, the value will actually be shown to the shareholder.
Some of the analysts are warning about your ability to pass on prices in Europe specifically, and citing that for the underperformance of your stock versus some of your competitors. What's actually happening in Europe?
Well, in Europe, again, we've got double-digit capacity increase in Europe. Europe is uneven as an environment right now, as you know. But overall, we're going to grow earnings in our European franchise across our brands in Europe. We're going to grow earnings this year, despite the unevenness and what have you. And we have a significant capacity increase. So the yield, while ultimately we expect to be flattish year to year, we're going to be growing earnings. And in the end, it's earnings and return on invested capital that create the value for the business.